Welcome along to the industry analysis for the management case study of May or August 2020. So before I get started on the industry analysis, I just want to address a question that is often raised by CIMA students, and that is, why are we doing an industry analysis in the first place? After all, you do receive some relevant industry information in the pre-scene document itself. Now, first of all, let me just say, you're not expected to be an industry expert. You're not expected to know all of the ins and outs of the real world industry. You're not expected to know all of the facts and figures and the history and so on and so forth. But there are two reasons I think it is very useful to do a deeper industry analysis of the real world industry ahead of your exam. Understanding that wider business environment and industrial context, I think, has two key potential benefits on exam day. First of all, it helps you to anticipate some of the potential issues that might arise in the unseen scenario and therefore avoid any nasty surprises or confusion on the day of the exam. So CIMA does like to make their scenarios as realistic as possible. And so, of course, obviously then they're going to look at the real world industry for inspiration. They're going to look at trends and developments in the real world in order to inspire the kinds of questions and scenarios that they present you with on exam day. So it's a way of perhaps trying to anticipate the kinds of things that they're going to present you with. Of course, there's no guarantee that you'll be able to do so, but it is still, I think, a useful exercise for that reason. It also makes it easier then to illustrate and apply your abstract theoretical knowledge by using concrete examples, concepts from the real world industry. So when you familiarize yourself more with the real world industry and the kinds of concepts, ideas and operations that take place there, that's going to make it easier for you to then use your theoretical knowledge in a practical way, in a way that's actually realistic and applies to the real world. And that's what's actually looked for in the case study exam. They're looking to see if you're able to realistically apply the knowledge that you've gained from your objective studies. So for that reason, I think those two reasons, it is a useful exercise to do this deeper dive on the real world industry. Okay, so let's get started, and we'll start with an overview of what we're going to cover in this industry analysis. First of all, we'll start with a general market overview of the hotel industry and hotel market. And then in section 2, we're looking into the future. We're looking at likely scenarios in the future for this particular industry, and also some key drivers, some key factors that are driving demand and changing demand in this industry. And then in the final section, in section 3, we're going to look at some real world cases, some real world companies that could perhaps serve as inspiration for the company that we're dealing with in the pre-scene, Alpaca Hotel Group. Okay, so let's start then with the market overview. So first question, what is the hotel market? What exactly does it involve? Simply put, it is the provision of short-term guest accommodation and related services. So remember, short-term is the key term there. We're not dealing with long-term accommodation of any kind. We're dealing with short-term accommodation. So what is covered in this industry? Well, it includes hotels, obviously, hostels as well, and professionally run guest houses. Things like B&Bs, for example, would also fall within this definition of short-term guest accommodation. What is not included, just make sure that you're clear here, is things like private accommodation and holiday flats, long-term lodgings, as well as private room and accommodation rentals. These are not, strictly speaking, included in the hotel industry. Accommodation can be booked in various ways, directly via the provider's website, for example, as you see in the pre-scene document, through a tour operator. A travel agency can also book into hotels, book clients into hotels. Again, we see that in the pre-scene document. Online travel agencies as well, these are becoming increasingly important, OTAs as they're also known. Or, of course, simply by telephone, you can book in the old-fashioned way, ring up the hotel and actually make your booking directly via telephone. So that remains an option as well. Now, there are various ways of segmenting this particular industry. And one way is by the service offering. Now, you are presented with a segmentation, a very basic segmentation in the pre-scene document. But in the real world, there are many different ways of looking at this industry and segmenting it. And this is one of the main ways by the types of services that are included. So you have, first of all, what are known as limited service hotels. These offer a bedroom and bathroom for the night, rarely has other services or amenities. This will tend to include things like hostels, capsule hotels, motels, and 1- and 2-star hotels generally fall within this definition as well. Then you have what are called select service hotels. They provide selected services which match the target market's needs. Services offered are generally adapted towards budget-conscious travellers, price-conscious travellers. It includes 3-star hotels generally, bed and breakfasts, inns, airport hotels, and so on. So they're the ones that you're looking at. That should say bed and breakfasts, obviously, not bread and breakfasts. So I'll make a correction after this. Full service hotels, mid-price, upscale or luxury hotels with a restaurant, lounge facilities and meeting space, as well as minimum service levels. This includes things like resort hotels and 4- and 5-star hotels. So this is generally aimed at the holiday market, but also you get, for example, business travellers as well are targeted by the full service hotels. And then finally, you have what are called boutique and themed hotels. And these are becoming increasingly popular in the last decade or so. These often contain luxury facilities as well of varying sizes, but they're in what are considered unique or intimate settings. Includes things like boutique hotels, cruise hotels, theme park hotels, and casino hotels as well would be considered in this category, boutique or themed hotels. Now, there is another way of segmenting, and that is, of course, by price level. So we have 4 main categories of price level here that we're looking at. First of all, you have economy or budget hotels, and they will tend to provide basic accommodation along with select services and appeal to visitors seeking an affordable stay, obviously. Then we have the mid-scale range of hotels. These are gaining in popularity among business travellers, and I think that's going to be more so the case if the coronavirus has a bad effect on the economy. Looking at companies are going to start cutting back on business travel expenses, and they're going to start moving down towards mid-scale hotels from the more upscale hotels that are typically associated with business travellers. Then we have upscale hotels. These are mainly 4-star and 5-star hotels, the fastest growing among all chain scales, generally speaking. And then we have international luxury hotels, and these are the real top of the line of hotel types. We're dealing with a large market as well, $171 billion market size, and the top 5 companies make up more than 26.37% market share of this segment. So the kind of major chains in this area are actually quite dominant compared to the general hotel industry, which is actually, as we'll see, quite fragmented by comparison. So let's look at each of these types in terms of the price segmentation, just to give you a sense of some of the examples of these hotel types in the real world. And if you're curious, you can also do a little bit more of a deep dive on the individual hotel chains in your own time if you wish to do so. So these international luxury hotels offer the highest level of personalised and professional service in major or capital cities. So that's the idea here with these international luxury hotels. They tend to be in the most in-demand locations and the highest value locations. You'll often find them in the most expensive districts of the major cities in countries. 5 stars or 5 diamonds are often the ratings that are offered to these hotels. At least 5 stars. You'll sometimes even see things like 6 stars and 7 stars for the really, really exclusive hotels around the world. They would also be considered in this bracket of international luxury hotels. Some examples, these are some of the most well-known, well-recognised names in this industry. So, for example, you would have the Ritz-Carlton, the Waldorf Astoria, and Four Seasons are some of the major names in the international luxury hotel price segment. Then we have the upscale hotels. Upscale hotels offer full services, ranging quality from upscale to luxury. So this is between 4 and 5 stars, whereas in the previous case we're dealing with, they have to be 5 star. They are just a top of the line. If they lose that 5-star rating, they're no longer considered international luxury hotels. So these upscale hotels tend to be somewhere in that range between 4 and 5 stars. Examples include the Marriott, Hilton, Hyatt Regency. And they tend to have more modern decor, okay, as you can see here on the right, whereas in the previous case, you're dealing with more kind of authentic styles, something that's very distinctive and very unique, whereas in the case of the upscale hotels, a little bit more generic, the kinds of interiors that they have, but still very, very high-end, very, very good finishes, very, very impressive hotels nonetheless. Then we're dealing with mid-scale hotels. These are the much more familiar, much more recognisable hotels. You'll often see these all over cities, small to medium-sized hotel establishments that offer a limited number of on-site amenities, and they tend to fall somewhere in the 3 to 4 star range. Examples include the Hyatt Place, Maldron Hotels in the UK and Ireland, the Holiday Inn, for example. These are often in major cities around the world. You will see these brands, these hotel brands, very, very familiar and recognisable. And then you have the economy or budget hotels, small to medium-sized hotel establishments that offer a very limited number of on-site amenities, average between 1 and 3 stars. So we're dealing here with the lower end. And often these are places that travellers will stop into, perhaps even unplanned stops and layovers, for example, and they just want to get somewhere to lay their head and to pay as little as possible. Examples include the Ibis Budget Hotels, Holiday Inn Express, and the infamous or famous, depending on your perspective, Travelodge. And especially in the US, that is considered really right down there in terms of budget. That's where you go if you have no other choice in terms of price range. You're very limited. You go to the Travelodge. So let's look at some of the figures, some of the trends in terms of demand, and some of the monetary figures as well. Now, before I go on, I just want to draw your attention here to the asterisks. Strong demand drives the market up. Now, these are reports. These are some of the most recent reports that were done on the hotel industry in general. But of course, these reports will have been finished before the coronavirus pandemic. And so I would take a lot of these figures with a pinch of salt. Of course, in the coming months, there's a huge amount of uncertainty. We don't know what the economic fallout globally is going to be from the coronavirus. But you can, of course, expect the hotel industry and the hospitality industry, generally speaking, is going to be hit very hard in all likelihood. So do bear that in mind. And I would also say regarding the case study exam itself, and this is a question which many students have already asked, they're saying, well, what's going to happen in the case study exams? Are we actually going to have a situation where the coronavirus scenario arises, is incorporated into the case study exams, or are the case study exams already written by CIMA, and so for that reason, unlikely to have the coronavirus scenario in them? What I would say is, first of all, as I mentioned at the beginning, CIMA does like to make their case study exam scenarios as realistic as possible, as true to life as possible. So there's a good chance that they are still writing some of these exams. They may not have written all of them yet. They may not, in fact, have written any of them yet. They're maybe still preparing their case study exams for the May exams. And for that reason, I would suggest that it is very possible that you're going to see some kind of virus pandemic scenario incorporated into it. However, it is also possible that they want to stick to the kind of world that was presented to you in the pre-seen document. So you might get a split, for example, of variants, some pertaining to a world in which there is a virus pandemic and there's all sorts of economic fallout. And of course, it's a very interesting scenario for a hotel industry. And so for that reason, I would prepare for both eventualities. You want to imagine the world as it would have been, for example, without the virus pandemic, and think about the world as it's going to be in the wake of this particular crazy situation that we're currently in. So that's why I put this asterisk here beside strong demand, is because you do want to bear in mind this is what was projected. These are the figures projected before the advent of the virus pandemic. So bear that in mind throughout. So the year-on-year estimated growth for 2020 was 4%. Revenue expected to increase at 4.1% compound annual growth rate from this range of 2020 to 2023. Market volume to reach $432 billion by 2023, so a nice large market. And the number of guests is expected to amount to 1.2 billion by 2023. This is all going well, of course, and let's hope that the coronavirus scenario doesn't put too much of a dent in these figures. 383 billion total market size currently, and you have 1.1 billion hotel guests globally in 2020. So that's just the current figures there on the right compared to the projections here on the left. So you can look at these in your own time, as we'll be putting these PowerPoints up on your account later on. So if you want to just home in on any of these particular figures. And as I said, you do want to bear in mind the effect that the current pandemic might have going forward over the next 2 to 3 years. You also have 15.4% market penetration in 2020. And it's expected to hit 16.2% by 2023. So market penetration is basically the percentage of the potential users, what are considered to be the potential market, the total market for hotel occupancy. So this is the percentage that have been, this is the percentage of the market that has been reached in 2020, and it's expected to rise to 16.2% by 2023. The average revenue per hotel guest currently amounts to $333. That's actually quite a lot of money. 24% of revenue is generated in the United States alone in this industry. So a huge market in the United States, $92 billion in 2020. So let's focus then now on some of these regional markets in particular, starting here with North America. Now, look down here, I have a key that explains some of these technical terms. Some of these acronyms you can see here. RevPAR down at the bottom left of your screen is revenue per available room. Total room revenue, but divided by the total available rooms. So that's RevPAR. Then you have ADR, and this is average daily rate, the total room revenue divided by the total rooms sold. And then you have the occupancy rate, total rooms sold divided by total available rooms. Now, occupancy rate is mentioned in the preceding document. You have that page for investors from the website. They talk about how much they want to increase occupancy rates, as well, of course, as wanting to acquire a new hotel every 3 years or so. So those are the main targets for Alpaca Hotel Group. So occupancy rate is mentioned, but RevPAR and average daily rate, these are not mentioned in the preceding document, but they are important metrics in the real world industry. So you can see US RevPAR growth slowed in 2019 with the ADR increase going well below inflation. So this is a very mature market in North America, and of course you would expect in more mature markets to see lower growth projections, lower growth rates. The Canadian hotel industry is experiencing similar market dynamics to the United States. The occupancy rate and ADR in Mexico declined by 2.6%. leading to a RevPAR decrease for the second consecutive year in 2019. So in Central America as well, things looking a little bit shaky. Strong supply growth, however, in Caribbean was offset by material ADR increase, resulting in a 2.8% RevPAR lift. So the Caribbean remains a strong, very strong market. You're still going to see growth there. You're seeing an increasing number of tourists looking to go to the Caribbean. That remains a very strong sub-market within the North American region. So that's always important to bear in mind. Then we have South America. So Costa Rica and Cartagena are driving growth in South America. Occupancy in South America increased by 1.6% in 2019, despite challenging political and economic situations in the region. So that's always important to bear in mind. With South America, you do still have considerable amounts of political unease and unrest in various parts of this particular area. ADR decreased by 6.3% due to currency fluctuations, so a lot of volatility in currencies in that particular region. The opposite trend is evident in Central America, 2.6% drop in occupancy coupled with 5.3% increase in prices in an attempt to offset the effect of the drop in occupancy. And that's a very, very challenging market indeed in Central America. And as we saw in North America as well, a very mature market. And so it's hard to make inroads there. Very well established firms, very, very established large hotel chains in North America, as we'll see. We're looking at a very mixed market performance across Europe, a lot of difference between the different countries within this region. RevPAR in 2019 grew slower, 2.2%, than both 2017 and 2018. Despite the risks from Brexit and the rise of alternative accommodation, Europe remained resilient and recorded 72.2% occupancy in 2019. So actually a relatively healthy scenario there compared to some other regions. Above average supply growth in several markets drove RevPAR decline. So for example, in Dublin, Copenhagen, Tbilisi and Warsaw, negatively impacting performance, but also indicating investor confidence across the region. The fact that you're seeing that supply growth indicates confidence across the European zone. Then we're looking at Middle East and Africa. Abu Dhabi and Marrakech boost the market in this particular region. Supply growth in the Middle East continued at a high rate. So a lot of building going on, a lot of hotels being finished in 2019, up 5.8%. But demand has kept pace and actually grown slightly faster at 8.2%. So this is a quite healthy market from a growth perspective. Despite occupancy growth, ADR remains under pressure in an increasingly competitive hotel landscape. So it is competitive as well due to that supply growth, of course, in response to the demand growth. So you're seeing a quite challenging market from the perspective of competition. Africa has enjoyed a positive RevPAR curve for close to a decade, up 2.6% in 2019. And then looking at the Asia Pacific region, increasing supply and infrastructure development across the region. 2019 finished with a 3.2% drop in RevPAR, driven by declines in both occupancy and ADR. Focus on growing intra-Asia travel has continued, evident in increased flight routes and infrastructure development. So you're seeing a lot more intra-regional travel in the Asia Pacific region, and that is obviously going to help the hotel industry. Singapore reigns as the region's occupancy leader with an annual level of 85.2% occupancy rates. Very healthy indeed. And the only market with an average ADR of around US $200. Okay, so Singapore is a very strong country in that region. And there is good signs with the increase of intra-regional travel as well. But you're seeing a 3.2% drop in RevPAR, driven by declines in both occupancy right across the region, minus 1.3%, and ADR down 2%. So I mentioned earlier that the luxury end of the hotel industry is relatively concentrated when you compare it to the overall hotel industry, which is actually fairly fragmented. You have a lot of chains of varying sizes, chains in different segments of the market. These are some of the most important hotel companies, the most recognizable brands. We have a list of them here: the Marriott International, Hilton Worldwide, Intercontinental Hotels Group, Accor, Wyndham Hotels, Choice Hotels International, and Oyo. And most of these own several different brands of hotel. So they actually have many different levels. So they work within different categories. You can see here on the right: luxury, premium and select service, luxury, premium, mid-scale, luxury, premium, mid-scale. So these are huge multinational corporations, huge conglomerates, often owning many different hotel brands. So hotel companies with over 500,000 rooms, that is the major players, some of them seen above, account for 11.34% market share in aggregate. So there are lots and lots of independent hotel companies, smaller scale hotel companies, ones that are specific to particular markets, national markets. You have a lot of variation in terms of offering in different countries. And so it is, internationally speaking, quite a fragmented market still, notwithstanding the presence of some of these major international conglomerates and hotel groups. Now, there is disruption in this industry. There is some pressure coming in from the outside. New players are challenging this industry, and of course, I'm sure you're very familiar with the main disruptor from the outside in recent years, and that is, of course, Airbnb. Alternative accommodation spaces are becoming increasingly popular, especially in the sharing economy. Usually, but not always, a budget travel option, heavily reliant on online communities, of course, and applications as well. Technology, very important. But just bear that in mind, that primarily Airbnb has been disrupting the mid-level mid-scale range of hotels. A lot of the time it's budget conscious travelers who look to Airbnb. They want to get a better rate, but not necessarily always. And Airbnb is always innovating and it's always expanding its offerings. And you do find relatively luxurious entire apartments, for example, that can be rented out, often very, very high end. And so that is also beginning to manifest pressure on the luxury end of the hotel industry. You're seeing a rising number of startups in the industry and from the outside as well in these alternative accommodation spaces. More real estate based offerings with hospitality at the core. So inspired by the Airbnb example, we're seeing more and more of these startups mimicking that kind of offering. Increasingly, more real estate owners offer accommodation that blends elements of hospitality and rental assets. So you're seeing a lot of people now, people are actually buying in apartments or indeed entire apartment complexes with a view to renting them out via things like Airbnb. And the more that happens, of course, the more pressure it's going to put on the hotel industry. So hotels are having to prepare to face these kinds of rivals. What you're seeing is a responsiveness in particular to the millennial generation, because it tends to be amongst the millennial generation and younger that the Airbnb type offerings are most popular. So what you're seeing then are hotels responding to the needs, the desires, the preferences of in particular of the millennial age groups and younger. So you're seeing the rise of affordable lifestyle brands. Hotel parent companies are now investing in brands that reflect the adopted flexible living and working approach of millennials. So this kind of co-working mentality and trying to incorporate that into some of the hotel offerings. Smaller, more technology-focused hotels, especially in densely packed urban areas, are going to appeal more to business and leisure travelers within that particular age segment in the traditionally underserved economy segment. So the idea here is that they're getting more economy conscious when it comes to appealing to millennials. They're trying to incorporate their flexible work-life mentality into some of their hotel offerings. And so that's something to look out for, and that's a way they're trying to push back against some of the pressures from the likes of Airbnb.